Traders, what's going on? Your president here, MJ Givens Khasi. What do we know so far with regards to the war? I recently had an interview with CNBC Africa, and this is where I was explaining my analysis going forward. Is this a time to make money? Well, I think so. Or it's just one of those wars where it's just going to be noise, right, when it comes to headlines, but the market is not really reacting. We have seen the WTI already and the Brent crude oil already getting a bit of appreciation to around $75 or so, and we are now closely filling up that gap. It's a Monday morning when I'm shooting this, so let me tell you this: there is a high possibility that one can take advantage of this market and become comfortable in profits that one is going to make. Why am I saying that? Safe haven assets are fairly reacting well. If we've been part and parcel of our live streams, you would know that we've been trying to buy gold from the low of $3,350 a barrel, an ounce there. What does that mean going forward? Where is profit taking? 3,400 was where we're looking to take our profits, and we are now on the sidelines seeing how the day and the week, how it's going to perform. But I want you to take a listen and obviously watch this interview and get my analysis going forward. And listen again, ladies and gentlemen, we are streaming almost every day. Take advantage of that. This is where we give you price points that you can always take advantage of. Whether you're a day trader, whether you're a swing trader, there's a lot. As for South Africans, the rand is now fairly at 18 rand or so. We have seen USD ZAR trading at 18 rand, and right now is trading exactly at, just 1 second there, let me tell you where it's now trading at. USD ZAR is now trading at 18 rand 18 rand 7 cents or so, right? We come to the lows of 17 rand 95, which was something that we also, as emerging markets, something that we can appreciate and adopt, right? Because we saw the ZAR getting some relative strength, but I don't think it had anything to do with us. It had everything to do with the weakness of the dollar. So what am I saying to you? Open up your eyes and make sure that you are looking in all sides when it comes to this. Your technical analysis, fundamentals, as well as order flow. Make sure that you are well equipped. Let's have a listen. But just before we do that, please do me a favor, like and subscribe and hit the notification bell so that you can be notified when you drop another episode. Cheers. Hi traders, it's a gifting season and the Trade and Win campaign has finally landed in South Africa. Every time you trade a standard lot, Octa drops one price lot into your Octa profile. Now, let me explain how it works. One lot traded is equals to one price lot, any closed position and any instrument. The more you trade and the more lots close, the more you unlock your gifts. What is also nice about this campaign is that you can choose from different types of digital gifts, from Take a Lot, Uber, airport launches, airtime, and many more. What is also interesting is that the delivery is quick. You can receive your gift within 5 working days. No expiry, price lots stay active if you keep on trading. Well, I think this is what South African traders needs right now. Being rewarded for pure trading. Listen, this is not luck or anything like that. This is pure math. Discover your collection and start earning with Octa today. Your prize is waiting for you. Cheers.
At this present moment in time. But we are joined by Givens Khasi, financial analyst over at Octa, for more on what is moving markets. Givens, thanks so much for your time. I mean, it did start off as a happy Friday for most markets, just looking at the gains that were clocked over in Asia, in Europe. At one point, US futures were also looking positive. But things haven't stayed happy right now if we reflect on the losses on the JSE, albeit marginal. What do you reckon is behind this?
Well, thank you so much for having me. Well, I think we just have to be honest with what is happening currently, that there's not really much that one can take advantage of. I think markets are just balancing optimism and caution. And I think one hand is obviously inflation in major economies like the US slowly cooling, right? And we are seeing that strength also coming from the US dollar, which keeps the door open for potential rate cuts even later this year, right? But on the other hand, globally, I think central banks, especially the Fed, are still hesitant to declare victory. It's too early to tell. We are in a limbo where markets are just reacting strongly to everyday data. And at the same time, we can have a look at AI-driven tech stocks because they are popping up in major indices, especially in the US, right? But underneath, I think the sectors like consumer staples, banks, and manufacturing companies aren't seeing the same strength. So globally, I think we are also seeing a rising concern around geopolitical risk, as you have mentioned, especially in the Middle East, and that's affecting the energy and the commodity prices. So I think the sentiment is mixed right now. Cautious and optimistic, but I think with a close eye, both inflation and we can see some tensions there coming in.
On the risk, the major talking point this morning, and perhaps starting from late last night, was the update from US President Donald Trump that he would decide within 2 weeks whether the US would enter the Israel-Iran conflict right now with further military support and strikes. So for some, that has been interpreted as a position by the US to opt for a more diplomatic channel to navigating this very traverse path, as it were. Whereas others are saying global markets at this particular point in time are underpricing the level of geopolitical risk still. What do you think, and how are you traversing in complexes like oil right now?
Well, look, I think the stance of the US is more on the defensive side rather than on the offensive side. The conflict is a serious geopolitical risk, right? And markets are just watching for any sign and situation that escalates into something that can disrupt the oil supply, especially the Strait Hormuz, issue about it being affected, through which we know that the large portion of the world oil passes through, right? And that could obviously trigger a sharp spike in oil prices. We have already seen Brent crude move higher on the back of this tension. This creates new inflation threat, just as the central banks are trying to get prices under control. Also, for the emerging markets, I think emerging markets will find it difficult to recover at this point. I think we've seen also with the ZAR that is quite struggling, right? And it also fuels the risk of these sentiments. Investors move into safe haven assets like gold and the US dollar away from a riskier emerging markets asset, right? So I think the conflict is just adding a layer to global uncertainty, and the markets are responding with caution. Back to safe haven assets like gold. I mean, we've been tracking price movements around 3,350. This is where potentially I thought maybe we could see the price of gold hold $3,350 an ounce. But I'm closely also looking at 3,300. If we hold that price, it's only a matter of time. Maybe we can see an appreciation. Globally, again, institutions and hedge funds and money managers are increasing their spread positions, right? So they are hedging. Everyone is just on the sideline. Only it's a matter of time until we see the US maybe being on the offensive side. Then maybe we can see something happen as far as the markets are concerned.
On gold, the yellow metal is up over 30% so far since the start of the year. But as you have reflected, we are seeing a weakness and pressure in today's session, but also for the week. So would you say the moves we're seeing in gold in the direction of travel right now is short term? Or do you reckon this pullback is part of a broader structural trend, as it were?
I think we have to also mention, Fifi, that gold in the last few months, it was overbought, right? There are, again, institutions, for me, $3,500 an ounce, that was merely profit taking. But I think, again, looking ahead of what's going to happen, maybe let's have a look at the US PCE inflation data that is going to be released. The Fed's preferred inflation measures right now, if it comes lower than expected, we could see maybe revive the talk on the rate cuts before year end, and that will lift the risk appetite, supporting, obviously, as I've mentioned, the emerging market. So I think for me, it's just a matter of time we're going to see that appreciation. Like I always say, for every buyer, there must be a seller. They needed to be a breather closely looking again, 3,300. It's just a matter of time. Maybe appreciation can come from gold.
And with inflation, it has been quite a eventful week for learning more about inflation and, of course, the interest rate decisions. We had the Bank of Japan, the Bank of England, the US Federal Reserve, all keeping interest rates on hold. This morning, I believe China was the latest central bank to also come out with its latest pronouncement on hold. Similar with what we have seen on the continent with the Bank of Botswana as well, and Namibia just staying pat on rates. What have you learned this week, if anything new, about the global interest rate cycle, just based on some of the decisions that were made and, of course, the commentary that were provided by these major central banks?
I think now everybody's just trying to play it safe. It's a safe approach, right? I think locally, even in South Africa, we've seen the CPI data coming out and the inflation stays high, right? Especially with the rising fuel prices. Most reserve banks, they want to stay hawkish for longer, right? That could obviously affect the interest rates sensitive sectors like maybe banking and property, right? But we need to keep an eye on commodity prices like gold, oil, platinum, because they are moving a lot right now because of obviously the geopolitical risk that affects local exchanges. In South Africa, we have seen the JSE and the rand ultimately, and the investor flows is quite low. So overall, I think it's a big week of inflation watches, and the numbers will set tone heading into the second half of the year.
Yeah. Lastly, I'm a fan of shopping. It's one of my most favorite forms of therapy. It seems less shoppers over in the UK in the month of May, with the numbers slipping there in the month of May, although this is the first time in 4 months that we are seeing pressure on UK sales. Just given that quite a number of South African retailers do have exposure in the UK market, is it time to worry in terms of what we're seeing right now with the softening of sales? Or do you need more data points to infer a concrete answer?
Yeah, obviously, I think it's too early to tell. The more information comes in, I think that's when we can have a clear insight of what's to happen. But I think the safe place to hide right now with so much risk will be how would shoppers and investors position themselves. I think it's being selective. Global investors are leaning into, strong balance sheet, pricing power, and a good cash flow, right? And I think resources are there for many nations to make decisions. But I think, Fifi, let's wait for more data to come and make those sound financial decisions.
Okay. And maybe with the further data will come further discounts for shoppers like me who also love shopping when I have to pay less. But Givens, we'll leave it there for now. So thanks so much for your time and your reflections on the markets right now. Have a great Friday and a great weekend further. Givens Khasi, financial analyst over at Octa.
All right, folks, that's all from my side. This was the 9 minutes or so interview with CNBC Africa. Please, on the comment section, let me know what is it that you're going to be looking for during this conflict between Iran and Israel. Can we possibly even say that US is now part of it? Let me know there in the comment section, and let's see how we can capitalize out of these markets. From your president, we are. Cheers.